Let's put the market mood in perspective with Gaurang Shah, Senior Vice President, Geojit Financial Services, who joins us this morning. Good morning, Gaurang. A lot of news triggers for the markets to digest, especially given that yesterday was a holiday. This morning opening to good news about a telephonic conversation between the US President Donald Trump and Indian Prime Minister Narendra Modi, the potential of bilateral trade talks resuming, and then in addition to that, of course, the cooling prices of Brent oil, all adding to momentum and the hope that the conflict in West Asia may be ebbing out.
Thank you, Kartik, for having me on the show. Good morning to all your viewers and to you. So first of all, let Trump sort out the mess that he has created about 7 weeks back. Unnecessary bloodshed and the destruction, and the outcome is we all know about it. So, I mean, and we all know, Kartik, we've discussed about this FTA with US, that India is absolutely in no hurry. It's been more than a year. 2nd of April last year is the date when he announced tariff. A lot of countries rushed to US and to President Trump to sign the free trade agreement. And then we all know the history after that. And more importantly, Kartik, I think he's got a royal mess to take care in US. First of all, the rising inflation. Second one is the ruling by the Supreme Court in US against the tariff that is implemented. I was reading a report about a week or 10 days back, which said that due to this ruling by Supreme Court in US and the tariff that has been collected illegally, supposedly, by Trump administration, comes to somewhere around $130 billion. Add to it, if there is any additional claim put in place, then that figure from 130 billion could go up to $180 billion. Where on earth are you going to pay that kind of money?
Absolutely.
And that is still unclear. So, I mean, why rush? So India is absolutely no hurry, and I absolutely salute the government, Prime Minister and his entire team for not rushing into it. Otherwise, I don't know what would have happened. So let's wait and watch. Let him clear the mess in his country and the mess that is created in West Asia in form of the geopolitical situation. As far as the markets are concerned, I think we should breathe a sign of relief. And honestly, all of us want a logical end to this unnecessary bloodshed and destruction that has happened. And if that is in place, then I think we'll have crude oil prices cooling off, but it won't cool off to a great level, pre-geopolitical level of $60-65, Kartik, because infrastructure has got damaged. And again, rebuilding that infrastructure is going to take quite a while. Right. So we will have to deal with elevated crude oil prices. And I think what the government and ministers have mentioned, including Mr. Hardeep Puri, that India has been negotiating with 40 plus countries to secure its energy requirement. And I think if there is a peaceful resolution between Russia and Ukraine, then there will be optimism in terms of Russian crude oil and natural gas coming into India at a discounted price.
All right. We are also in the earnings season, Gaurang, and Q4 earnings. In fact, some of the big Nifty 50 companies, including TCS, have announced. Wipro is set to announce their results tomorrow. But overall, the fact that we are in Q4 earnings season, the fact that this war took place while we were still in Q4 and you had 1 month of March in between, and that is likely to sort of have an impact on the numbers as well, on the earnings. And then, of course, the latest inflation print that we've seen, CPI inflation at about 3.4%. Some estimates suggesting that coming months could see even higher inflation. Overall, the Q4 earnings season plus this first quarter that we are in with potential elevated prices, and then of course also IMD suggesting not the best piece of news that we could see a below normal rainfall this year. Overall, how do you see maybe the next 2 quarters or so panning out as far as investors on the Lal Street are concerned?
If I have to put one word in place, then that would be challenging, Kartik. Not only for the earnings season and for the economy, but also for the stock market. March month, 1 month, Kartik, will not have a huge impact on earnings because normally sectors have a long-term contract in terms of crude oil input, derivatives as we call it, dependency. If the so-called resolution, and I seriously, all of us hope that common sense and wisdom and fine sense of judgment prevails upon Donald Trump, of all the people in the world, to put this to an end. So that impact will be there. And we also heard the Honorable RBI Governor during the credit policy that it is a clear and present danger, this geopolitical situation, and 80% reliance on crude oil imports any country like ours would have that kind of problem. And of course, dependency on Strait of Hormuz 60, 65, 70% odd, not only for natural gas and crude oil, but also for other raw material inputs. So we will have a little bit of challenging time. My sense is that fourth quarter will not have much of negativity of whatever has happened in terms of geopolitical situation.
Okay.
But yes, the current financial year, the new financial year, first quarter, that could witness a little bit of pain. Then it depends upon how corporates manage their input cost and operational efficiency to reduce the negative impact, Kartik.
All right. And for investors, fresh or existing investors sitting right now on the 15th of April, wanting to invest into the market, are there any sectors which are sort of proofing themselves against what is happening in West Asia and the direct or the indirect impact? Are there any sectors which would totally remain isolated from all the chaos that we are seeing in the world?
None at all, Kartik. Let me be very honest.
Yeah.
I don't want to beat around the bush. No sectors will be left untouched, Kartik.
Are there, let me rephrase it, are there sectors which are better off than other sectors at this moment?
So I will again rephrase that. Relatively less impact, negative impact, Kartik, if you will. So you have power generation sector, you have telecom service, basically services oriented, Kartik, is something that I believe will be relatively less impacted. So you have power generation, you have telecom service providers, you have healthcare services like hospitals. They do really well in terms of isolating themselves from the current noise that is going around, and a firm conviction in the entire BFSI segment. So I think, and of course defense, Kartik, though they are into manufacturing, but yeah, defense is relatively insulated.
So these are some of the sectors: healthcare, communications, defense, banking and financials, relatively, to use your phrase, relatively better off. Let's leave it at that this morning. Gaurang Shah, thank you so much. As always, pleasure having you here with us on News 9.
Always a pleasure. Thank you, Kartik. Thank you.